Welcome back, folks. Greg Silverman here, Outsource CFO. A lot of our clients are actually in the biotech space, so this article percolated up, and I thought it would be of interest to some of our biotech clients with who we are acting as interim chief financial officer, as well as helping them with tax structuring, planning, and overall business structuring. So let's see what's going on in the world of biotech. A strong dollar could whack these biotech stocks. First, Bioscience, 10 times genomics, and others with large international exposures could be squeezed by global currency sell-offs. Biotech investors have no shortage of troubles at the moment. They may soon need to add a soaring US dollar to the list. First, Bioscience, 10 times genomics, and others that serve as the engine for the biotech and synthetic biology sectors generate only about a half to two-thirds of their revenue from customers in the United States. That exposes the rest of the company's sales to currency fluctuations, which have been historically brutal in 2022. Worse, the gap between the greenback and almost every global currency has widened through the year with no signs of slowing. That means investors may need to brace for disappointing operating results for the quarter ended September 22 and downbeat full year 23 revenue guidance from a number of otherwise strong businesses. Why is the dollar strengthening? The US dollar has become more valuable since the Federal Reserve embarked on its aggressive but necessary op-ed path to raise interest rates in a bid to stamp out inflation. Not all central banks around the globe can raise rates at the same pace or by the same magnitude, which has created a widening gap between US treasuries and bonds issued by other countries. As a result, the United States has witnessed an influx of international funds chasing higher yields and relative global stability. That pushes up the value of the US dollar and pushes down the value of international currencies. It may seem improbable that the United States, which created trillions of dollars of new money supply in recent years and continues to cough up massive deficits, would have the strongest global currency, but stability is one of the most important attributes in investing, and the nation has plenty of that to offer. Recession or not, it's one of the least bad options globally. Strong greenback presents both challenges and opportunities for American companies. It makes imports easier as US dollars can purchase more goods and services. It also makes exports more difficult as international buyers will find American will find American goods and services more expensive than using their local currencies. This can be a blessing and a curse for emerging markets. That means companies with international footprints will absorb both the positive and negative consequences. However, it could take a disproportionate bite out of the growth trajectory of smaller, unprofitable technology companies that typically don't hedge currency risks. That could be a problem considering a hefty portion of the valuation comes from pricing and future growth. How to tell what biotechs are most exposed. 10 times genomics sells lab instruments for single-cell analysis experiments, which are becoming increasingly necessary for biological R&D. The company has delivered reliable, albeit unsteady growth over the years. Total revenue swelled from $71 million in 2017 to $490 million in 2021. Importantly, the business achieved one of the highest growth margins in the lab hardware category and was nearing a positive operating margin. That's something a few peers ever achieved. The growth stalwart originally expected full year 22 revenue of $615 million at the midpoint, which would have represented year-over-year growth of about 25%. But international sales were unusually slow in the first half of the year, forcing management to significantly lower expectations. 10 times genomics now expects full year 22 revenue of $510 million at the midpoint, which represents growth of just 4% compared to last year. A deeper dive into the numbers reveals that currency headwinds are playing a role. According to SEC filings, the business reported an 11% drop in first half revenue from customers in China and Europe compared to a year ago. That's unusual for a fast-growing business. It's painful considering these customers represent 37% of total revenue. Despite the sharp reduction in full year 22 revenue guidance announced this summer, worsening currency headwinds in the months since suggest another downward revision could be on the horizon. 10 times genomics generated 53% revenue from the United States in 21. China and Europe represents another 15 and 22% respectively. These regions were responsible for 55%, 13%, and 20% of respective revenue in the first half of 22. First, Bioscience designed synthetic DNA for various applications spanning drug development, diagnostics, and organism engineering. It's become a trendy and popular growth stock, but one that legitimately earns that title. Whereas investors typically expect software businesses to increase gross margin as they scale revenue, that doesn't always happen when physical goods are involved. Twist Bioscience is one of the few exceptions among small cap stocks, growth stocks in biotech or synthetic biology. The DNA synthesis leader tends to underpromise and over-deliver, which has helped it to continuously raise fiscal year 22 revenue guidance with each passing quarter. However, investors may feel a little uneasy knowing the revenue footprint has expanded globally over the years. The business generates 68% of its revenue from Americas in fiscal 2019, which slipped to 59% in fiscal 21. The company's fiscal year ends in September, which means the next quarterly report will wrap up fiscal 22. It also means that investors will soon receive fiscal full year 23 revenue guidance. Twist Bioscience has a healthy long-term growth runway, but currency headwinds and lower valuation multiples assigned to growth stocks could lead to some near-term disappointment and pain ahead. Twist Bioscience generated 59% revenue from the US in fiscal 21. Asia Pacific and Europe represented another 8 and 33% respectively. These regions were responsible for 62%, 9, and 29% respective revenues in the first 6 months of calendar 22. Be mindful of risks and long-term, and think long-term. Geography revenue mix can be found in SEC filings for most companies. Investors can use the examples above to scour the financials of stocks they own, biotech and otherwise. As the stock market correction has shown, it's important to be mindful of risks. That includes valuation risks, regulatory risks, development risks, commercial risks, and now currency risks. It's possible 10 times genomics and Twist Bioscience can outgrow currency headwinds, but it seems unlikely to me they'll escape entirely unscathed. Investors have already borne the brunt of that risk for 10 times genomics, although shares could tumble lower if full year 23 revenue projections take a hit. Meanwhile, few investors or analysts seem to acknowledge that Twist Bioscience has a sizable valuation risk baked into the stock price, especially if growth starts to wobble. Shares could fall almost in half from current levels, depending on fiscal year 23 revenue guidance. Well, there you go. Interesting. We do act as outsourced CFO to biotech companies. If that's of interest to you, please let us know. But it's interesting, the international flavor of some of the revenue of some of these biotechs and how the currency impact is affecting. So if you would like to know more or like to understand how you could hedge perhaps against some of these currency risks, do let us know. Greg Silverman, outsourced CFO, out for now.